Bitcoin's up by 100%, and Nick from Data Dash actually made a very long video detailing why he's going to be going short on Bitcoin, and I'm going to be responding to it in this YouTube video. Now, if you don't know who he is another young YouTuber. He's actually got a huge channel based out here in the United States, and you guys are going to love his content. He's been bearish for a while. Obviously, you guys know me. I've been very bullish. So this is going to be an interesting video. I've been watching him on and off for a little bit, and I think you guys are going to really enjoy it. If you want to watch his video, check it out, link down below. It's a nice little 27-minute video. We're not going to go through all of it. I'm just going to highlight the key points. And it's worth noting, guys, that I've actually been long in this market for a long time now, right? I've been long on Bitcoin since 21.5K, and you guys have known very well. I've made some really nice profits sitting in over $200,000, over 400% ROI. Really, really happy with it. But I always say that it is my duty as a trader, as an analyst, to constantly evaluate the other side and just check if I might be wrong and stuff like that. And that's why it's really important for me to listen to people like Nick over here. So I'm quite happy with what I'm doing here. I'm still going to be staying long. Let's see if he can actually convince me otherwise. And before we continue, I want to highlight to you this huge offer that Bybit is running, where you can get an iPhone 14 Pro Max by signing up to Bybit using my link in the description down below and depositing your first $100,000. I'm sorry, $100, only $100. This offer ends literally within a day or two from now. So check it out with the link in the description down below. Very, very easy. All you got to do is sign up and deposit $100 and you have a chance to win an iPhone 14 Pro Max. But let's get on with the video here. He just gave a bit of an intro, but I want to go through this and jump right to the main talking point.
And vice versa. When I know that we're in a contractionary period, I'm generally going to be betting against assets. And I'm only going to be doing it when I see overt exuberance. Because when I know that there's overt exuberance in the market, like there is now, as we've gone up from around $15,500 towards around $30,000 in near 100% move in Bitcoin, this is where I start to sink in my teeth. This is where I want to build short positions to bet to the downside. And I understand some of the critics.
So he's just explaining here that he hasn't really been in any particular positions, hasn't been shorting the market specifically as well, which is good. Obviously, you don't want to be shorting a big rally. But now about how like we're in a bear market, there's a lot of exuberance, price has doubled. This is the kind of area to go short. This is basically what I'm hearing from Nick right now. And I completely agree. I've been talking about this since the beginning, since we were down at 17K and I was calling for 30 and I was calling for 40K. I always said from the very beginning that I don't necessarily think this is a bull market. I don't think this is something that's going to stick around. I don't think that this is going to be necessarily anything more than a bear market rally. And I've always maintained that perspective, to be honest with you guys. I mean, you can kind of see it just from the way I've even, you know, like where my, I'm putting my money where my mouth is here. You know, I started this position off with, you know, $110,000 and I'm only sitting with like 20% of that left in this. You know, like I've closed most of my position by now as well, because I wasn't actually really targeting significantly higher levels than this. This is a good area for the market to start kind of pulling back, simply because we've been now rallying for a very long time. I mean, this is the Ethereum chart right here, but if we take a look at this with the Bitcoin chart, I mean, you know, it's a bear market. We've moved up massively. It's the first big move we've made in a while, and this is also the first time we've hit extremely strong resistance. So when we start talking about short theses and stuff like that, and like, is it time to start considering short positions in this market? I am 100% exactly where Nick is. I mean, and that is why I have been downsizing my position so much as we've approached this level. You know, even though I wanted to, you know, I still wanted to maximize the profits. I'm still very happy with where the numbers are. You know, this is plain and simple an extremely important area for the price. You know, and we're not coming at it with the best. You know, I mean, it's a rally, you know, and rallies end at resistance, and that's just a fact, right? Like, I mean, it's a strong rally. I like what I'm seeing. Short term, it's looking strong. Mid term, it's looking strong. Even long term, like right from the low, it's looking pretty good. You know, but it's still a really big area of resistance that's quite formidable. So I totally agree. This is where you want to start looking at short positions. Doesn't mean it's the right time to enter, but it's where you want to start looking.
Or people who have disagreed with us here. I respect anyone for their viewpoints, but what I don't respect is people claiming that we've been short. We have not been shorting the market. We have not been building short positions over the past few months, which is why.
Just more clarification here that he hasn't been trading shorts.
I'm going to go ahead and let you all know that it's likely that we are not repeating the kind of same hyperbolic fast recovery that we had in the last cycle. At least we're not going to be going to that extent, a 300% move, roughly speaking, right? From bottom to top, this was a massive expansion in Bitcoin's price, a much bigger move that carried out for a longer period of time. So far, we've seen about a 100% move. So I really don't like when people make this comparison. What I really think is a lot more fair when it comes to percentage terms and is more relevant to what we are experiencing right now is the same relief rally trap that is constantly played out during this bear market. A lot of people make the case that this was the all-time high in the cycle, and it's true. In November 2021, we did set.
So, you know, he's saying that he doesn't think that what we're in right now is similar to what happened here when Bitcoin bottomed at 3K, rallied all the way up to 14. It was a huge rally. You can see it right here, 339% gain. He's saying that we're specifically not doing that right now simply because the gain is smaller. You know, and the thing is that there are a lot of similarities though that I'm seeing. You know, we're still coming off a major low. You know, we're still beating the odds in a sense. We're forming a lot of the same patterns. You know, we're starting off kind of slow and then we're getting really explosive. You know, we formed a lot of the same continuation patterns during. Like, there are a lot of similarities. You know, but I don't necessarily think it's the same thing either. I never said I was expecting the price to, you know, triple or anything like that either necessarily, although, you know, 40K is pretty close to tripling the low. You know, this was more like a 4 or 5 times gain, so this is definitely a different magnitude of you know, kind of strength. But also important to keep in mind that the market has matured, right? So we are expecting, I mean, it's not like out of what we would expect, you know, that we could form something similar to what Bitcoin did before, you know, but it would just be a smaller move. You know, that is still something that you would expect, given that we all know the market is maturing. So it's neither here nor there. It's not really something that I think is particularly relevant if we are repeating what we did last time, because at the end of the day, we still were in a bear market, and that's kind of the point, right? Is like, because Bitcoin is so volatile, we can form extremely strong, and this is still, to me, a relief rally. Other people called it a bull market. Other people called it, you know, whatever. In my head, this was always a relief rally. That was just part of the wider bear market that we started up at 20K. And that's still what I think this could be. So I'm still kind of leaning in agreement with him. We're just maybe differing a little bit on some of the definitions, which in all honesty don't matter particularly much. But I did watch this part, and what he's about to say here is really interesting.
A slightly higher price. But notice here the pattern that we may be very well repeating. A 139% move from the midterm or mid-cycle correction lows that were back here in June of 2021. And within a matter of about 20 weeks, we saw Bitcoin rally 139%, only to fall back down right at a time when everyone was convinced of the super cycle, of the dollar collapsing, and Bitcoin being the super asset that's going to go towards $100,000. What happened after? We entered into a brutal bear market, a multi-month downtrend, almost.
You know, so making the argument that the bear market actually started up here, and like, even though this was a slightly higher high, it's still part of the same bear market. Now that is a stretch, in my opinion, but a lot of people are making that stretch. Again, ultimately, it doesn't really matter. And I do see the similarity here. I mean, you know, 20 weeks up by 139%. Over here, 20 weeks up by 100%. If this was a relief rally within the bear market that started up here, then this would also fit the same profile for being a relief rally. The whole argument here that I'm seeing, and I haven't watched the rest of the video, but I'm guessing, is that we have the same setup that resulted in, you know, a kind of collapse over here that lasted in a really long bear market. We have that same setup right now at the perfect time to get rejected. And it is, right? Like, in hindsight, if the market starts to trend all the way down, we go to $6,000, you decide, you get your lotion out and give me the most bearish price target you've got, you know, hiding in your closet, in the trenches, you know, that you haven't looked at for a long time. Bring it out, let's put it on the table, let's talk about it. If that kind of price level gets achieved, then yeah, this is the best time for Bitcoin to get, like, everybody is starting to finally get on this bandwagon. But here's the thing is they're not. That's almost something that I just made up. If we take a look at this, refreshing the 4Flies dashboard right here that I've been using for some of my analysis with you guys, we're still majority short with the market. This is what's confusing, right? And Nick is talking about this a little bit, but it's a weird picture. It's hard to complete it. Because on one side, fear and greed index is super high. We're looking at a reading of 68. People are pretty bullish in general in the market. But on the other side, retail is still majority short. Even on Bybit, top traders and retails mixed together, still majority short. If we take a look at some of the other data I'm going to show you in a minute, this becomes an even more compelling image. This is actually really where I kind of start to deviate a little bit from this, and you'll see why in just a moment.
Going down for an entire year, actually pretty much an entire year from our peak in November of 2021. This cycle has been defined by these exacerbated moves since back in 2019, and it speaks to a broader issue in crypto. The broader issue is overt speculation through derivatives. Liquidity has flown into derivatives and futures contracts, and that has left the spot order book incredibly susceptible to whales who can take advantage of it because they have the mass, they have the liquidity, and they can extremely exacerbate their profits and swing the market in favorable directions to their positions.
Okay, let me translate this just so that we're all on the same page. He's saying that there's a lot of derivatives liquidity. That's, you know, the kind of trading that I do, the kind of trading that I talk about on Bybit, where we can leverage up and, you know, whatever, make 10 times more, but risk 10 times more as well, for example. I want to highlight, like, this is the main trading I do. I love it. Bybit is offering you a huge amount of money to sign up using my link in the description down below. You're getting up to 30K in free trading ammunition. Check it out if that's your kind of thing. It's neither here nor there if this is bad, you know, but it's very clear that this kind of thing makes markets very volatile. And so what Nick is talking about is absolutely true. We are in a market that has a lot of derivatives action. But here's what's weird. It's actually something that I've covered with you recently, which you'll know about if you were subscribed, where we've got some really interesting on-chain analysis. I just want to show you this guy on Twitter real quick, just so we know who he is. This is a guy called 𝐶HECKMATE on Twitter, who is the lead on-chain analyst at Glassnode. Now, for those of us who don't know, on-chain analysis simply means analyzing Bitcoin's blockchain, right? Every transaction, every movement of Bitcoin that happens on the internet is visible to everybody. That's the point of Bitcoin. That's why Bitcoin is an interesting bit of tech. And on-chain analysis is something that allows us to analyze that chain of transactions, right? So we can get a really good idea for what's going on. And what this is showing us right here with this data is open interest and just other information that has to do with derivatives trading. And what we can see is actually on this chart right here is a view of liquidations. Now, what Nick is saying, right, if we just kind of repeat what he said,
order book incredibly susceptible to whales, and it speaks to a broader issue in crypto. The broader issue is overt speculation through derivatives. Liquidity has flown into derivatives and futures contracts, and that
so this is a big part of his Bitcoin thesis, I'm guessing, because the next bit is Ethereum, and then we're talking about other, like, more macro things, you know. So and that's why I really want to zoom in on this and talk about it. He's mentioning, my guess is where this is going is that this big run up in price has been driven by derivatives trading. But we know, you've seen me talk about on this channel, that that's not the case. Look at this data right here. This is liquidations that we're seeing in derivatives trading. Take a look at how big these liquidations were back when the market first reached $64,000. It actually massively shut off, you know, right when the market started to collapse. We didn't really even see it come back to life over here when Bitcoin hit 69K, which, you know, is further confirmation for what I was talking about in this rally, where the reason I was warning you guys that this rally was dangerous was because nobody was buying Bitcoin. It's just that nobody was selling, right? It basically meant not many people were trading Bitcoin, so the price going up doesn't mean that it's valuable, right? It's the same thing as, like, if you incorporate a company with 10 billion shares and then you sell one of them for £50, your company is not worth 10 billion times £50, right? But that's what happens with Bitcoin, and that's what happens with illiquid shitcoins and so on, is that there's just not that much liquidity. There's just not that much trading action happening. So if the price does go up, it makes it look like the whole market is big and inflated and worth a lot of money, but it's not, right? And that's why this rally was dangerous. That's why you guys know that I was super bearish on the market on this rally. I became very bullish right at the top, so I completely fucked that up, and you guys know that that's just how that played out. I'm still glad that I sold a bunch of Bitcoin up here. It was actually up here to buy a house, you know, and that kind of helped me a little bit, but that's neither here nor there. If we keep an eye on these liquidations, we can see quite clearly that there are not that many down here, right? There is a little bit of increased activity compared to the pits where absolutely nothing was happening, but we're still not seeing a crazy amount of data to support you know, huge trading activity, even by the bulls. Here's something interesting, right? Funding rates up here are positive, but you would make 2% by being short. Now, what does that mean? Well, if a lot of people are going long on the market, then you're going to start getting paid to go short. That's just how the fee structures work. We're not going to go into that. But it's only sitting at 2%. you know, so we're not looking at a particularly big funding rate either, which is all interesting data that kind of points in the direction of the market is moving up, but I don't think it's necessarily moving up because of derivatives trading. We're not seeing that many liquidations, which means we're just not seeing that much derivatives trading. We're not seeing that much open interest from like actual derivatives exchanges. We're getting that more from options markets, which we can see down here. So that's also slightly different. You know, and at the same time, we're not seeing the funding rates to suggest that it's a particularly crowded trade, you know, to be going long right now. And that's something which is really important, right? If everybody is piling in the direction of going long, then yeah, we're more likely to tip to the other side. That's just a fact, right? That's usually how these things play out. But we're not at that stage. So is this really a rally driven by derivatives? Like that's my question in response to this, because on a logical level, we know, yes, a lot of the extreme price moves in crypto and any market really can happen as a result of derivatives trading. But is this rally driven by derivatives trading? I don't think so. It doesn't look like it. The data doesn't point to it, you know, and a lot of the real world factors don't either.
Left the spot order book incredibly susceptible to whales who can take advantage of it because they have the mass, they have the liquidity, and they can extremely exacerbate their profits and swing the market in favorable directions to their positions, allowing them, whether it be the exchanges, whether it be whales, to take advantage of traders in the spot or derivatives markets. Doesn't matter which market you're looking at. The idea is to make exacerbated moves, squeezing out shorts during these relief rallies, and basically liquidating or at least hitting the stops on a lot of longs on the way back down. It's the simple nature of the game, folks. And if you can't understand...
Yeah, and that's the thing, is he's saying that, you know, like, these moves will squeeze out shorts, for example, but this data that I've just shown you literally show, like, okay, yeah, I mean, shorts are getting squeezed. It's the red, you know, red here indicates shorts getting squeezed. So they are getting squeezed, but I mean, you know, it's not astronomical. Like, look at what we were dealing with before. I don't know. I feel like if we really were rallying up to squeeze shorts, it would have been more effective than this. That's my take.
If you don't understand who is really directing price here during these quiet times where there's not really any narratives, there's not some massive QE injection, there's not stimulus checks being handed out to everyone like there were during the pandemic, then you're going to get chopped up. You're going to get caught up in the emotions. And this is the perfect time now to go against those emotions, to go against the FOMO here. As we mentioned, we've been patiently sitting on the sidelines, but we've been listening to these indicators. And I'm going to start running through why we're so confident in this, guys. All right, first off, let's go ahead and talk about...
So, I mean, I got no problem with being sidelined, right? Like, you know, I made a lot of money on this rally. I'm happy about that. You know, but if I was on the sideline like Nick is here, I don't have a problem with that, and that's something that's important to keep in mind. And that's one of the reasons I wanted to make this video as well. You know, a lot of people feel like they need to trade every move, and since I'm on this side of the table talking about it, I feel like it's even more important to bring it up. Is that it doesn't matter if you miss a move. There's an unlimited number of moves, and even if you miss a huge rally for Bitcoin, or, you know, like there was a shitcoin that you wanted to buy and it went 50x but you sold it before, that kind of thing, it doesn't matter. Like, there's always going to be the next opportunity, and that's really important to keep in mind. And if you get into the kind of mindset where you try and force yourself into trading every opportunity you see, if you do the opposite of what Nick was exercising here, you'll find yourself being in bad positions more often. You know, simply by trading less, most people will make more money. That is something I've seen very clearly in my experience. Every sound on the planet is happening right now. So sorry about the audio.
Take a look back at what happened in May of 2022 onward into November of 2022. Month by month by month, we had stablecoin liquidity contracting, and we had Bitcoin's price following suit. We are not seeing a rapid expansion of stablecoin liquidity. And that is going to be needed. It has been needed every single time since stablecoins like Tether have become a component since back in 2015 for Bitcoin's price. If Tether is not expanding and coming under increasing scrutiny, we need to be very cautious. Not to mention, taking a look at USDT, USDC dominance, we're coming down to that support line here. Last time we were here was November of 2021, and the last time after that was February of 2021. Those were the two ranges where we set in that high around 65 to 69K. Are you sure you want to be chasing the FOMO now, guys? If you've been this patient, if you've been waiting on the sidelines, this is the moment where it's finally time to start sticking to actions that match with our thesis.
Yeah. So that's it. And I've been saying the same thing. You know, when you've got situations like this in the market, what I'm waiting for as somebody that's still in a long position is for people like Nick, for people like Nick's viewers to flip, to have been on the sideline for like, if there is a special type of pain in watching Bitcoin go from up here, all the way down here. You know, for example, like up here, down to here, if you're bearish and you're still bearish up here, there is a special pain in knowing you could have made money down here and you could have made money up here. And that special pain can push a lot of people off the edge to become late bulls. It can turn bears into late bulls. And that's what I told you guys I'm waiting for on this YouTube channel as a derivatives trader. I need to see people like Nick throwing in the towel saying, fuck, I was wrong. I need to buy Bitcoin because it's already double and it could double again. You know, that's the kind of sentiment I want to see. And he's actually warning people against falling into that trap, which is amazing, right? Because I mean, if you don't fall into traps like that, you don't lose money. So that's great. And that's basically the same thing I've been talking about on this channel, wrapped in different words, you know, which is that, you know, this is where, like, when I start to see a lot of the, you know, like if we keep pushing deeper into the 30K range, like right now, we're just on the edge of it, right? We're even slipping below 30K a little bit, you know, not recently. Actually, recently we've been doing okay. I spoke to you guys about this area of support. We're still holding it, which is pretty interesting. It's a really tight area of support. I don't think it's a particularly good one, but we are still holding it. So that's something, you know, but a lot of people, you know, it still hasn't quite set in that we're in the 30K range to them, you know, because we're just on the edge of it. But if we rise deeper into it, you know, and we get to say 33, 34, we get into the mid 30s, you know, people are going to start looking, and they're going to start feeling a lot of that pain. You know, and that's exactly, like, if we start to get that pain, that's where I flip my bias really quick, guys. Like, I'm still leaning bullish, right? Even after what Nick is saying, he's made some good points. He's been talking about why, like, new liquidity from the dollar isn't entering the market either, you know, which could potentially be, you know, I'm assuming now based off what you said, a reason that, you know, demand doesn't, you know, keep rising, or that demand isn't particularly high. That's something he's been talking about. You know, like, these are good points. I'm still leaning bullish, but one of the things that will really flip me is if I start seeing that people throw in the towel and they're like, shit, I've missed out on so much, I just need to buy now so I don't miss out on more. When I start seeing that kind of sentiment in the space, I am getting out of my long positions real quick. In fact, I want to be out a day before that even happens, because that's a dangerous place to be when people like that, you know, start saying stuff like that.
Patiently waiting for a very long period of time for this moment. And all we need to do now, we need to wait for the momentum signals on the shorter term timeframes to start to show weakness, to start to give us those signs that it's time to start fading the trade. Now, I want to go ahead.
So this is it. Like, he wants to get the confirmation to tell him that it's ready to enter a trade now, that the momentum is over, you know, for the bulls, and that we're going to start flipping that momentum to the bearish side. And that makes sense, right? Like, if you're not in a trade right now, then what else can you do, right? Like, you can't. This is a bad time to be in a trade. We don't have confirmation of being bearish yet. You know, we've already rallied up so much. If you're bullish, like, it's a bad time to. So I get it. It makes sense, which is why, a little bit earlier on, when we were at lower price levels down in the 20K range, I had to start thinking. I was actually having a conversation with a friend of mine about, like, there is more pain in being a bull, in being a bear, than there is in being a bull. Because when you're a bull, you have unlimited upside, but when you're a bear, you can only make up to what, like 100%, you know, on the downside. Otherwise, I mean, and then the price is zero. So, you know, that's why I like my more aggressive approach. Obviously, it does mean that you end up wrong as well more often. You know, so you got to eat more losses. It's a more aggressive style in general, right? You know, but that's why I kind of lean in this direction in particular. I just, you know, I feel like it's more suited to me personally.
And talk about why, again, I'm quite confident on this position. And it's not just me bashing crypto, guys. I love cryptocurrencies as an asset class. We've been covering crypto here since 2017, much longer than a lot of the people out there who are perma bulls, who think this is absolutely going to be the next bull market.
Yeah, so he's just saying here that it's like he's not trying to, like, bet against Bitcoin or anything like that. I don't want to watch this part because this is probably like a bunch of disclaimers for haters that don't understand content.
It was the Dow Jones, because people rush the defensive stocks, and they think that that's going to save them because of the dividends, because of the cash flow. Unfortunately, at the end of the day, as we've talked about before, over the past couple weeks, past couple months, nothing is safe during the contractionary period. Valuations contract in an environment where there is less credit and liquidity. I don't want to speak in absolutes, guys. I don't want you guys to be you know, convinced that I think we have all the answers here. But folks, and whether
so, I mean, he's talking about, like, contractionary periods and how that's not a bullish environment. But a lot of money was printed, and we know this, like, for the banks. So he's talking about how like the bank runs, aren't really happening as like they were before and stuff like that. It's interesting, right? I mean, there was a big crisis. It looked fucking scary. And actually, to be fair, the government in the United States did a good job of calming people down and just making sure that people didn't like rush out to buy all the toilet paper, for example, like what happened in 2020. So I'm with you there, right? Like that kind of crisis isn't quite happening right now, but money was printed to bail the banks out. We know that. We know that it erased. We covered the data. It was like 8 months of quantitative tightening was completely erased within about 2 weeks of money printing, so that is like, I'm not, that money isn't necessarily going into the economy. Yes, that's true, but that money is still being printed, and that will have a knock-on effect on inflation, which basically is the opposite of a contractionary environment where more money is entering markets.
Looking at technology stocks, S&P 500, Dow Jones, whether you're looking at Bitcoin or Ethereum, we are seeing repeated patterns here that unfortunately can trap and trick up a lot of investors, a lot of good-meaning people who, again, I understand at the end of the day, want to see a return to the good time. You suspending rates in this environment, which is going to put, and I think we don't want that either. So we need to be realistic about what the Fed is likely going to do and how that's going to affect asset prices. I know it can't be fun all the time. I know that sucks, but I'm here to be realistic with you guys. I'm not here to promote referral links. I'm not here telling you to stack. That's the long-term trends, right? That's where it matters most. Take a look at the VIX here. The VIX is yet again in its support range since as far back as November of 2017. So is this really the time, again, we understand the volatility moves inversely to stock prices in the vast majority of cases. So if the VIX is this low and it's at historic support for the last 5 years, likely means it's going to rebound. And if the VIX is rebounding, volatility spiking, that means equities are going to start to move lower. We've been remaining patient since back in March here, waiting for that VIX to contract into this range. Just where it was back in January 30th when everyone, the FANG stocks were rallying, Facebook or Meta gapped up 25%. Everyone was convinced that it was time to go long these stocks. That's my cue. The FOMO is real. When I start getting people who are, oh man, I'm in cash, I really, really want to get into trade now, that's my cue. Because I know that's when peak FOMO is starting to form in, and it's time to take a contractionary trade. Another one of our indicators here that we're using within the 𝐿KS suite again gives us these really great bands.
This is interesting because a lot of the things I'm saying, he's actually saying the exact opposite. But he's keeping in mind similar things to what I've been discussing too. I want to hit back on both of these. So for VIX, I'm not actually super familiar on what the VIX is. I haven't really used it. You guys have never heard me talk about it in my life. My understanding is this is just charting the volatility of the S&P 500. Fairly straightforward. And he's saying that if it's low and it's kind of in the support band, we might get a bounce, which means volatility goes up. I don't know why that's a bad thing. If volatility goes up, the S&P 500, is at a good place where price explosions could start to happen, in my opinion. I mean, yeah, it could definitely nuke, and this becomes a bit of a double top, and then we get some really big volatility that way. But I mean, I've been saying how I still think it could, move to the upside. So I don't know if maybe I misunderstood what he's talking about when it comes to the VIX, but my understanding of it, more volatility isn't, I don't know, I'm a trader, I want volatility. So I'm not sure why that's an issue. Even for the market rising to the upside, that's probably just something I didn't understand. Here, he's probably going to talk about how we've seen similar drawdowns into this kind of green range right here with the Lux Algo indicator, which we've actually spoken about on this channel. It's actually linked in the description, I'm pretty sure. And actually, by the way, while you're down there, I do want to highlight the second YouTube channel I've opened up for altcoin analysis. You're going to see some content on that later on today, right after this one. So go over there and check that channel out if you want to get some altcoin analysis from myself. And I do want to remind you about that huge offer with Bybit, where you can get up to $30,000 in trading ammunition. And just by signing up to Bybit and depositing $100, you have a chance to win an iPhone 14 Pro Max. But that offer ends literally within a day or two from now. So you need to use that link in the description to check it out. And by the way, guys, as we're going on, this is a long video, and because of copyright and just, making a good video, I don't want this one to get too long. So I'm not showing you a lot of Nick's video. I want you to specifically go to the link in the description to his video and just watch it, start to finish, if this is something that you think is interesting and important to you, because you're not getting the full scoop of what he's saying just from my video.
Contractionary trade. Another one of our indicators here that we're using within the Lux Algo suite again gives us these really great bands of potential resistance and support. And this one has been working really well on the dollar. I know a lot of people.
And so, yeah, he's talking about how the dollar could be ready to find a little bit of support. And that's something that I've been talking to you guys about a little bit as well, because I've been pretty bearish on the dollar. I've made that super clear, not for the same like fear porn reasons as everyone else, right? Like everyone just wants to see the world fucking collapse, and everyone who's not in America wants to see America die and fail. And like I'm obviously not in that camp, right? Like I'm just not fucking psychotic wishing on a country's death, you know, like to start with, you know. But at the same time, I've seen a lot of reasons for why the dollar could continue to lose strength. But the number one thing that I've said with my long-term analysis with you guys is that this green box is still an area of support. We've got one bounce off it here. If we're bearish, here's what you need to consider, is we can still have a bounce. It might not be a big bounce, it might only go up to here, and then we do something like that. That would make a lot of sense. We also need to keep in mind that the dollar isn't your kind of like, you know, shitcoin or stock that goes up and down constantly all the time. Like this is a major world currency, and it moves slowly, and it's only comparing the dollar against other currencies as well. We need to, you know, just ground ourselves in the context of what we're actually looking at. We're not looking at a chart that's going to do this. Okay, let's make that very, very clear. We're looking at a chart that's going to move slowly. This is an exception. This is how the dollar usually behaves. This is how the dollar usually behaves. This stuff is all the exception. So let's just keep that in mind, which means that like when we're at support levels, you do kind of have to just stop and pay attention when it comes to things like the dollar. If you don't, and you just keep on running, assuming this is crypto and things move quickly, and you know, dynamics of things just completely change and flip on their head, and it's normal, you know, for that to happen every few years. That's not this chart. So finding support where we are now makes sense. And that's one of the things that I'm not like, I don't want to just keep that same extremely strong bearish bias on the dollar right at the bottom of this support area, because at the bottom of support areas is where you must expect bounces. I've always said that to you guys. Support is where you bounce, resistance is where you get rejected from, you know, like that's just basic TA. And I don't want to fade that with the dollar chart, because this is a really long-term chart, so it's just very likely to have that kind of move. If we do look at the dollar falling off a cliff right now, you know, we have to put this in real world context. Like the dollar isn't going to drop from here down to here without something really bad happening to the dollar in the real world, in the news headlines that you are going to read in the news over the next few weeks and months. Do you think something that bad is going to happen to justify the dollar dropping down this low? I don't know, and that's not an answer that I'm going to try and give you. You know, I don't necessarily think that we're in crisis mode like that. You know, that's just my opinion. Not at a time where every major Western central bank, in response to the bank runs that happened weeks ago, have said that they're going to buy more dollars. When the Bank of England and other major Western central banks have said we're going to buy more dollars to stabilize the worldwide economy. Is that the environment where the dollar is going to keep, like, do you know what I mean? Like, I don't want to be that perma bear on this asset. So I am seeing good reasons for why this thing could be ready for a bit of a bounce. Maybe not a big one, maybe not even a bounce, maybe it just goes sideways, but continuing to drop lower, I don't want to make that bet when we're literally in a support zone, you know, like it's just foolish in my opinion. It's just a naive thing to that's the kind of, you know, just brash behavior that you would exhibit if you're still new to the market and you think that everything moves up or down in a straight line. It doesn't. Things just aren't that fun.
Gives us these really great bands of potential resistance and support. And this one has been working really well on the dollar. I know a lot of people are focusing on de-dollarization, the narratives in the headlines. It's come out of pretty much nowhere because of some trades in liquid natural gas that were conducted in Chinese yuan. It's a fraction of global volume. De-dollarization maybe is something that will play out over time, but it will take a decade or more to play out, and it's certainly not going to be attested or challenged by the Chinese yuan, which, when you're considering demographics of China, the fact that...
So this is the other thing that we've been talking about on the channel is, like, we are seeing big countries deviate from using the dollar for their trade, but it's still isolated. You know, like, one of the things I've been saying, I don't know if I said this on YouTube, but I've certainly said to friends, is like, I don't see, you know, the UK, France, Germany settling foreign trade in the yuan. You know, like, okay, Russia's gonna do it. Who wants to trade? You know what I mean? Like, sure, like other, like, you know, countries like Iran or whatever, I'm just naming countries that the US doesn't like, might do stuff like that. Saudi doesn't want to be bent over for the United States, you know, and stuff like that, right? So big countries that might have a reason to kind of, you know, not want so much power from the US government will consider things like the yuan, but a lot of other countries won't. So we're not looking at the end of the dollar's supremacy for those reasons. Like, at what point do we start to consider, like, are we looking at a situation where people are just kind of blowing things out of context while the price is still dropping, because that's just what happens when people become very, polarized in a particular direction, or are things actually that bad, and it's almost always never actually that bad.
Want to immigrate or store their wealth in China. The Chinese yuan, as much as I think China's a very interesting country, it's a beautiful country in many ways, there's a lot of flaws there, and it is not going to serve as some major world reserve currency. I don't think the world wants to store its wealth in a currency that's backed by its two largest components, which are Russia and China. Just being realistic with you guys, we kind of, West has been kind of at war.
Yeah, we know this too, right? Like, we're not, the world isn't going to put all their, like, if we're not going to put all of our faith in the United States, we're not going to put it in fucking Russia or China, right? Like, that, let's make that clear, So I don't, it's, okay, yes, we're seeing cracks. That's what I'm, I'm seeing cracks. Like, people are stopping using the dollar. That's a crack. That's not a major gaping hole. That's a crack. It's a sign of something bad, and the US ought to pay attention, but it's not, we're not looking at, everything, this being the beginning of the dominoes all falling. I still think that we've got a little bit of space between that, because your other option is China or Russia. So, we're going to need something a little bit better than that if we want, very long-term security, and we don't want political beef and stuff like that. So I think that's an important thing to keep in mind.
With Russia over the past year as a proxy war with the Ukraine. So these are the kind of points that I would really keep in mind here. When I see the dollar coming down about 14 points, last time we saw the dollar index move down 13.7 or 15.6 points. We're back here around 15.3 or 15.8 points.
So it's a standard correction
coming in. So I think
that's what he's saying, is we're looking at a standard correction for the dollar. Makes a lot of sense. Yeah, we've covered that pretty clearly.
It moves here in its price. Time and time again.
Now I'm interested in this, because if he's bearish on gold as well, that's going to be a little bit. That's going to be something that I'm going to struggle with, because I'm pretty bullish on it. I'm interested to... Oh, he's saying I'm incredibly bullish on the dollar. Okay. So he is not bullish on gold then, right? Is my guess.
That there might be some kind of trade there, maybe in the gold miners, where there's a little bit more kind of, not per se leverage, but a little bit more movement in price off of the base commodity increase in valuation. Right? Gold's been on a nice rally since October 2022. Right? It's made some significant moves here in its price. But time and time again, this is the range where we don't exist very long, so to speak. We don't stay up in this range for very long. So at the end of the day, guys, look,
So he's expecting resistance where we get resistance. It makes sense. I understand. Gold is at a resistance range. But it's getting tighter, right? Like, this is something that we've spoken about. Like, we didn't test it for a long time, and then bam, and then bam, and then bam. It's getting shorter. Take a look at this. The gap between the first and the second test, 3,200 days. Between the next two, 600. Between the next, 400. We might get rejected here, but that next rejection might, it might take gold. I mean, this is going to sound a little bit ridiculous, but it might take gold only 9 months to get back up here again, which for gold is really fast. So that's something important as well. Like, if we don't get the breakout here, if it doesn't sustain, I think we're going to come back knocking on this door again very soon. But the reason that I think we would still be able to hold this level is because gold is still ultimately what people buy when they're unsure of what's going to happen in the world. And yes, the issue with bank runs and stuff like that isn't as big as it was weeks ago, but people with money are not stupid, and they're still going to be interested in securing their assets at a time where it's clearly still dangerous. It might not be extremely dangerous now where all the fires are burning, right, like it was a few weeks ago, but we're probably going to see more of that, and I think that's why a lot of people are still interested in gold. So I don't see gold losing like, at worst I would see something a little bit like this, but I think the time where we rise up here and then instantly get rejected and rise up here and instantly get rejected, I think that's over. I think we're already seeing signs that it's over, which I've covered with you, which are that, previously gold got up to this level and the very next weekly candle we were out of the price range. Well, take a look at this. Gold got up to this level, the next two candles corrected, the next candle we're up. The next candle over here, we're on a weekly candle. We've just finished this candle as well. We've spent a long bloody time up here. Like, if we look at any price action that happens above this green box or at this green box, historically, we could not last more than 1 week over here. Look at this, right? Look at this. Look at this right here. We couldn't last more than 1 week up here. This time, we've been up here around this price level for 5 weeks. The strength is hard to dispute, in my opinion. Yes, this is where gold has been rejected before, so I understand, hesitancy at this price level, and that's why we're not getting the big breakout yet, because other people are feeling that hesitancy too. But this time, even if it doesn't materialize, If it doesn't materialize, like I said, I don't think it's going to be long until we come back. Like if we pull back, it's not going to be long until we come back again, and try and break out. But this time it is very clearly, coming at this price level with much more strength than we had before. So that I think is important too. Closing remarks here. I don't want to go through this now because this has become a pretty long video. He's raised some really good points. I'm not convinced. I haven't changed my perspective. What I've told you guys is that like I'm gonna stay bullish until I kind of see a reason not to, right? Like I'm gonna stay bullish until 30K as well. So I'm starting to get reasons to not be super bullish now. We've risen up by 100%. I've made a lot of money on my long. I'm very happy with it, but we're at resistance. So there are good reasons to start being bullish here. But ultimately, what I'm interested in, because I'm a short-term trader, and why this hasn't convinced me, to change my perspective, is because we haven't seen the real shift yet, right? Like we're seeing extremely good reasons that a shift could be coming, and it would be very justified, and it would make so much sense in hindsight if it came now, or if it came in a few weeks or a month or two. It would make so much sense, but it hasn't happened yet. And the time between now and when or if that happens, because it's not guaranteed either. This is the problem with analysis styles like what Nick has, in my opinion, is that we don't even know if it will happen. It looks good. It's a good probability that what he's saying will happen, right? I think it's a good, it's a sound prediction, sound analysis. I like it, but there is a long time potentially, or even a short time between now and when these things happen, if they happen, and that time is where I'm making my money. That's the big difference, right? Like that's my approach as a trader. That's what a lot of people kind of miss, is that like this uncertainty time is where the money is possible to be made. And that's why it's interesting, right? Like we could do very well what Nick has been speaking about, but that doesn't mean that Bitcoin has to stop rising deeper into the 30K range. That like when the market gets to this level of irrational exuberance, or it's not even there. That's the thing, is when the market gets to this level of irrationality, there's still a lot more that we can go. The late bears haven't turned over into bulls, right? We're still not seeing a spillover with the long and short ratio, where in general is still more people trading short positions, especially on retail. Like the retail is not fully bought into this with their money, and the numbers are very clear. We're even seeing it in the derivatives market. It just, that excitement hasn't caught back on. So to me, that final thing that it doesn't need to be there, but generally is there when the market starts to pull back, that final thing isn't there yet. So I still feel justified with a small portion of my initial trading capital. Compared to what I put in, this is now, only around 20%. I feel comfortable to let this stay in the position, right? I've closed most of it because there are good reasons now to not be in, heavy long positions, in my opinion, but I'm still long. I'm still trading the upside, and I'm still expecting the upside after watching that video. But damn, that was a good one. Let me know what you guys think about this video. I've never done anything like it, so it's all brand new to me. Nick, if you're watching this, you're a fucking legend, mate. Let's meet up. I'm in the United States, and I'll be here just for a little bit longer. So if you're down to meet, let me know. I'm in California, but I can fly around. So that would be very, very cool. And if you liked his stuff, then check it out. If you're a more long-term, if you're not as short-term as I am, if you're not kind of interested in that thing, if you're more interested in long-term positioning, if you're more interested in macroeconomics, and looking at the world instead of just crypto, his channel is also going to be interesting for you. So it's been linked down below. Go ahead and check it out down there as you are done with this video. And I want to remind you guys one final time about this beautiful giveaway opportunity on Bybit, where you can get an iPhone 14 Pro Max simply for registering on Bybit using my link in the description and depositing your first $100. And like I said, this will end within the next day or two. Just head on over to this link in the description and check it out. Really hope you've enjoyed this one. You know what to do if you have, and let me know in the comments specifically, and I might even do more of these. Take it easy. Cheers.